Greetings, ladies and gentlemen. It's time for another edition of Thinking While Driving. Today, we're going to talk about tax rates versus tax revenue. This is a very important concept. If you can grasp this, you'll have a real appreciation for the difference between liberals and conservatives. Now, tax rates and tax revenue may sound and sometimes are used by some folks to be the same thing. Let me assure you, they are anything but the same thing. As tax rates move, tax revenue over the long term moves in the opposite direction. In other words, if I'm taxing you at 15% and I raise your taxes to 20%, what does that do to you? Well, it does the same thing as raising the price of anything else. If gasoline is $1 a gallon, you probably don't think twice about going out and around the town, what have you. Your driving is really a secondary thought. But let's let gas go up to the $4 it is right now, or $5 or $6 a gallon. And trust me, I think you would agree that you're going to scrutinize every decision you make as far as when you're going to drive, where you're going to go, how you're going to combine trips, carpooling, and so forth. The fact is, as the price changes, so does your behavior. And it's the same thing with income taxes. As you get to keep more of what you earn, it motivates you to want to go out there and to do more work and to produce more because you get to keep more of what you earn. And conversely, the less you keep of what you earn, the less motivated you are to go out there. It really is just that simple. So when you hear politicians talk about raising taxes, that really doesn't do anything to raise revenue. All that does is to take away the incentive of the producers in society to go out there and produce more. It takes the economy down several notches, and it shrinks the economic pie for everyone. You can look at the example of Walmart. I think it's a good illustration of how things work. It's very similar to tax rates. Now, Walmart, the large company that it is, makes a lot of money by making a small profit on each item. Now, we could see them raising prices and trying to get the absolute maximum profit that they could off of each individual item, but that would do nothing to keep their ambitions of growing their business and maximizing their profits. The people at Walmart, better than anyone, understand that a small amount of a large amount of money is still a large amount of money. So, just as Walmart generates more money and creates more interest in their products and their stores by keeping prices low, so it follows that the government will get more revenue in the long run by lowering the tax rate, but incenting people to go out and produce more and increasing the size of the economic pie for everyone, and therefore generating more revenue. Tax revenue. If you look at what Ronald Reagan did by lowering tax rates, you can see on the chart that the tax revenue for the country as a whole went up remarkably. And in fact, it was only when George Herbert Walker Bush did the read my lips, no new taxes thing and then doubled back on it, the economy was getting the U.S. GDP and tax revenue, the economic growth was getting such to the point we were about to balance the national budget deficit at that point. And then the tax rates went up and things got off kilter at that point. So I'm going to close this up by saying that remember that tax rates move opposite of tax revenue. If you want more tax revenue, you lower the tax rate. If you want less tax revenue, you raise the tax rate. It really is just that simple. Thank you. God bless you as always, and God bless America.